Ryan Dietrich, from a technical perspective, is the S&P overvalued, undervalued, or just right?
Well, right here, we do think it looks just right. We think those lows we made 2 weeks ago at 1291 are fairly significant. Now, you break it down, that's a little bit above the 200-day moving average, which is a good longer-term trend line. Also, that's right around the October peak that we had, so previous resistance could be support. Also, it's a 38% retracement from the recent rally, another commonly followed retracement level. So all in all, we think we hold those lows from 2 Fridays ago. Things look pretty good to us.
All right. Any other indices you're watching?
Yes, there are actually. If you look at the QQQ, the big NASDAQ, the technology ETF, the 60 level net, very significant. It was resistance last year, just found support there. And interestingly enough, the all-time high on the QQQ was 120 back in March of 2000. Half of that is 60. We've done some studies. Half highs can't have significance. So half of 120 is 60. That's been a very significant area. We think that looks pretty good. Lastly, the small caps. Small caps to us, the IWM, for instance, at 750 level, or the Russell 2000, 750 level. That area, again, resistance last year, support now, 200-day right there. Also 750 is the year-to-date break-even level. In other words, there's a lot of reasons to think this market should hold where it has bounced, and hopefully the bounce can continue.
All right, let's drill down a little bit more. Which sectors or stocks do you like?
Well, Schaefer's the way we look at the market. We look for price action that's strong amongst negativity. And one of the favorite areas that we've had for a while is the consumer stocks. Look at the XRT, the large ETF, retail, consumer area. Very strong price action, lots of negativity toward the consumers. And you talk about short interest. There's been big spikes in short interest names across the board. One of our favorite plays is Visa, obviously big consumer name, big cap. Its short interest over the past month soared 50%, yet the price action was very strong. So lots of bearish bets coming in. We like to see that. One other favorite of ours is Expedia. Very strong price action. You could argue maybe overbought in the near term, but lots of bearish sentiment. Huge shorts against it, bearish put ads coming in. We like that negativity, says there still could be money on the sidelines. Push those stocks higher.
Finally, we've seen a spike in the VIX recently with all these European troubles. Is this going to be a turbulent summer in your view? Because I know you watch that indicator quite closely.
Well, you're right. When you talk about the VIX, we've scratched our head a little bit because we've had some half-point intraday moves, yet the VIX will spike upwards of nearly 10%. So it just hammers home how on edge everyone is. But we look at the last 2 years where we had an 18% correction, a 21% correction. We don't really anticipate that. We've had a 9.2% correction, a very big spike in the VIX. To us, hopefully volatility, contrarian play would say, what do you think is going to go lower? Well, volatility, there aren't too many people saying a lower volatility. We do think that this market, if we get any good news at all out of Europe, we could see lower volatility this summer.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to